Welcome to MacroHive Conversations with Bilal Hafiz. MacroHive helps educate investors and provide investment insights for all markets, from crypto to equities to bonds. For our latest views, visit macrohive.com. It almost looked like the risk sell-off was over. Both stocks and crypto bounced at the start of the week, but alas, they're tumbling once again. Markets are clearly unstable, and so as we've been writing in our asset allocation updates, sometimes it's better to be in cash rather than in markets that can drop suddenly, especially in a year like this. In this environment, we're stepping up our support for investors. And due to popular demand from our members, we've launched a new weekly report that collates all of our latest investment and trade ideas that have been featured across our platform. And on top of that, with all the noise around the depegging of the Terra USD or UST stablecoin, we have another new publication. This time, this monitors the major stablecoins in crypto and sees whether there is pressure in other coins as well. Outside of these, we've recently featured pieces on the rise of food prices, an update on Ethereum price dynamics, and our latest equity sector views. To get access to these, simply become a member at macrohive.com. With membership, you can get access to all of our updates, webinars, transcripts, and our member Slack room, where you can interact with the MacroHive research team and other members all hours of the day. Membership to MacroHive costs the same as a few weekly cappuccinos, and so go to macrohive.com to sign up now. And if you're a professional or institutional investor, we have a more high-octane product that features all of my and the MacroHive research team's views, our model portfolio, trade ideas, machine learning models, and much, much more. Hit me up on Bloomberg or email me on bilal@macrohive.com. That's B-I-L-A-L, bilal@macrohive.com to find out more. Now, on to this episode's guest, Jay Newman. Jay has spent over 40 years in international finance, most notably at Elliott Management. There, he focused on distressed EM sovereign debt, and he was central to the historic 15-year fight to recover billions of dollars in defaulted Argentine debt. That campaign, which included the court-approved seizure of an Argentine Navy ship in Ghana with 200 people aboard in 2012, reached a successful conclusion in 2016. The Wall Street Journal reported that the settlement was worth $2.4 billion. The FT said the settlement is seen as one of the greatest hedge fund trades in history. Jay has now switched to writing, and his debut novel about dark money and global politics is called Undermoney. Now, onto the podcast. So greetings, Jay. It's great to have you on the podcast show. I'm really enjoying the book that you've written, Undermoney, which I'm sure we'll talk about in our conversation. But welcome to the podcast show.
Thank you. It's such a pleasure to be here, Bilal. Thank you for having me.
Now, I always like to start my conversation with guests to learn about their backgrounds, their origin story. Where did you go to university? What did you study? Was it inevitable you would end up in finance and then later writing books? So tell us a bit about your origin story and how you ended up where you are today.
It's origin stories. Of course, in the book, I write about origin stories because I'm fascinated by them and the mythology that we all build around ourselves. But I think if I'm starting to tell my story, my parents believed in travel, and my mother was kind of an extreme traveler. And in the 60s, when this would have been about 1968. I was just a kid. My mother decided that she had read about the Pan American Highway, which was a highway that was meant to enable people to drive from Canada all the way to Panama City. And she decided that she was going to do that. And so we set out with my dad and my younger brother, and I set out in a car in fact, it was a Mercedes, because she figured that Mercedes was something that's going to get serviced anywhere in the world. And so we set out, and she drove us, my father and my mother drove us to Mexico City. And my dad then flew back to New Jersey to go back to work. And my mother, a single woman with two preteen boys in the back seat, drove us from Mexico City to San Jose, Costa Rica.
Oh, okay.
It was in retrospect, it was audacious and breathtaking. At the time, it seemed, you do what your parents tell you to do, but along the way, I do remember, particularly in Guatemala, which was in the midst of one of its incessant civil wars, We were stopped all along the way by, in some places by bandits, some by guerrillas, some by army troops, basically kids with guns. It was such a different time. Nothing bad happened to us. They were confused by us. There were no real tourists in Central America at the time. But if you think about today, you couldn't drive from the U.S. to Mexico City and survive. So it's such a different world we're living in from the world that I grew up in. But that really whetted my appetite for things international and for travel. So a bit of a fast forward. I went to public school in New Jersey. I ended up going to Yale for college. I studied history of art and economics, more history of art than economics. And from after college, I went right to law school, which for me was a terrible mistake because I ended up practicing law for 5 years, which were quite long, although in my career, I've used law a lot. So it's the knowledge was certainly not wasted on me. But after 5 years of practicing law, I got recruited to go to Lehman Brothers to work on new product development. And the first product area that I worked on there was whether Lehman could develop a market for defaulted sovereign debt. This would have been 1983, 1984, just in the midst of the first big wave of sovereign defaults. I was very fortunate because I did the business plan. I had visited 50 banks and 10 countries, and everybody said, this would be great. It'd be great to have a market in these instruments. Kind of ignoring the fact that to that point in time, there was no market in bank debt, no market in defaulted bank debt, and basically no market in even high yield bonds, which are just kind of being developed. So the decision of the new product committee was to go ahead and start this business. The boss looked around and said, who wants to, and by the way, this is classic Lehman, classic Wall Street in the 80s. It was a breakfast meeting. Everybody was smoking cigars. So in between puffs, my boss, Francis Sanfal, said, okay, who wants to run this business? And everybody looked down at their sausage because everybody had a business. They didn't want to take a chance on something that was completely new and unproven. So I raised my hand and said, well, I'll do it. And they said, but you don't know anything about running a business. You've been a lawyer until about 6 months ago. Why, how could we give this to you? I said, well, why not? Nobody else wants to do it. And that's how I got started in sovereign debt.
Okay, wow. And then I guess later we had the Brady bond restructuring, which I suppose you matured that market, I suppose.
Yes. Well, for a couple of years, and this was a strange period in the world of money center banks and in finance, because the banks were unable to recognize losses on their portfolios because they would have gone belly up. So during this whole period, the loans, and by the way, there are other whole categories of loans, oil and gas loans and real estate loans that the American money center banks were stuffed to the gills. So there was a lot of extend and pretend in the restructurings, and nobody really wanted to engage in any sort of a restructuring that would result in banks having to provision for the assets. So for 2 to 3 years, Lehman and Bear Stearns pretty much had this nascent market to ourselves. And then all of a sudden, Citibank started writing down its portfolio. Everyone else started writing down their portfolios, and J.P. Morgan and American Express Bank and Marine Midland, Chemical Bank, all these names that no longer exist. But people started writing them down, and then the market really started roaring to life with a lot of competitors, trading desks at the major banks like J.P. Morgan and like Citibank.
Okay, yeah, understood. And then later you went on to work for Elliott Management. Can you talk a bit about what their focus was and what your role was there?
Well, I don't know if you've probably heard the story, but I'll tell it anyway because it's part of my mythology. The during Between the two world wars, there was a massive inflation in Germany, and as a result, people didn't want the local. They didn't want the local currency. They wanted assets. So people would trade. It was a barter economy. People would trade shoes and sardines and furniture and whatever they could that was movable. And one day, one guy traded a can of sardines for a pair of shoes. And a week later, he went back to the guy that had, taken his shoes and given him the sardines and said, "Those sardines were rotten." And the guy with the shoes said, Why did you open the can?" He said, "Well, I was hungry. That's why I took the sardines. I wanted to eat them." And the guy said, No, those were not eating sardines. Those were trading sardines. And for the better part of a decade, defaulted sovereign bank debt were trading sardines. One day I was sitting at my desk, and at that point I had left Lehman. I was at Morgan Stanley. And I was reading about somebody who had sued the Republic of Paraguay and had actually collected and seized assets of the central bank. And shame on me, I had never thought. No one, I think, at that point in the market had thought about the idea that you could actually enforce sovereign debt in court. But at that point, being a reformed lawyer, I actually read the contracts. I looked at the few other cases that were out there, and I realized that under the right circumstances, if you had a debtor that could actually afford to pay, that the loans were enforceable. So I developed a business plan, and I went to my boss at Morgan Stanley, John Mack, and I said, "John, I've got a great business for us. We're not going to go into these restructurings where people are writing down the assets, 10, 15, 20, 50% for no reason, just because it's a social thing to do. We're going to buy the loans. We're going to try to negotiate our own deal or improve the deal for everybody. And if it fails, we'll hold out and we'll go to court." And John said, whoa, wait a second. Morgan Stanley is going to go to court and sue countries? I said, "Yes, exactly." And he said, "Exactly not. That is never going to happen." So I built a business plan, and then I looked for people who might be interested in that sort of an activity. And I met Paul Singer at Elliott Management, and basically did sovereign investing and enforcement work for 22 years.
That's a great story. Yeah. So the analogy with the sardines was that people were trading it as just an item to trade, but nobody actually looked inside what the asset was. And that the same thing was happening to EM debt, where people were trading the paper, so to speak, but not actually looking what the paper was attached to or what it reflected. And so you put forward,
Exactly. And of course, you've seen many categories of assets that fit that description, right? Including a lot of the coins that are out there.
Yeah, absolutely. Yeah. And then you're kind of famous, for the work you did with Argentina, Elliott's action, against Argentina. So can you tell us a bit more about what was going on with Argentina, what the default situation was, and what investors' approaches were to the defaulted debt?
Argentina. So I lived with the Argentina default for the better part of 15 years. And it was everything that could go wrong and ultimately could go right in sovereign debt, I think, is embodied in Argentina, its behavior and its restructurings. But Argentina, and Bilal, I'm telling you nothing you don't know because you know the place well, you know the people well, but Argentina is an amazing country. It is wealthy in natural resources. It's wealthy in human capital, but it has just this one little problem, right? Running its country in a sound way. And as part of that, the ancillary to that problem is that Argentina doesn't have any problem defaulting on its debt. I think now with the most recent default of 18 months ago, I think we're up to about 7 sovereign defaults, and there will be more. I think I can predict that with some logic and certainty. But the thinking with Argentina was that, as an investment thesis, is that Argentina would have been much better off paying more than it wanted to, which was as little as possible, settling with its creditors, and obtaining access to international capital markets. And we're talking about the period 2002, 2003, 2004. And I know you were there for part of that period. And I'd love to hear your story about the thinking at the time in Argentina. Because at that point, it wasn't the litigation case. It was just a matter of Argentina and ultimately the Kirchners, husband and wife, deciding that they were going to use the default as a populist meme and screw foreign capitalists. So it was a process that began in 2002 and went on for 15 years.
And so, international investors who held Argentine debt, what were the different approach to dealing with that? Presumably some thought they'd just write it off. Others decided, like yourself, I suppose, to take an enforcement action and try to retrieve assets. What was kind of the general way people were approaching the default?
Yeah, so in the initial round, and it's kind of the usual suspects owning the debt and buying it at par, which are the real money investors. So the real money investors buy sovereign debt, they put it in funds, and Argentina's whatever allocation it is, and then when it defaults, typically real money regurgitates the assets and it gets purchased by hedge funds or other opportunistic investors. And at that point, it's a matter of people, and people have different strategies. So many people who are able to buy Argentine debt in the some in single digits, some in the teens, some in the 20s, were able to benefit from various price movements and sell out along the way. And there's a lot of rotation in Argentine debt over that period of time. But there were a few investors, ourselves included, but a core group of, I would say, 5 investment funds that kind of stuck with it. And for a very long period of time, kept trying to find a partner to negotiate with within the Argentine government. And unfortunately, notwithstanding, many efforts over the years, that didn't happen until there was a regime change from the Kirchners to Mauricio Macri. And it was only at that point when you had a real shift in the political dynamics there that it was possible to actually achieve a settlement.
And then in terms of settlement and doing an enforcement against a country, I mean, how does that work? I mean, you go to court and then the other side is some representative of the country, and you're talking about assets of the country that, could be used to pay back the debt.
Yeah, I'm glad you asked that. I did a piece 2-3 weeks ago for the Financial Times, and I basically referred to sovereign debt as an asset class that's unsafe at any price. And there's been a real shift in the quality of the documentation for sovereign debt. The debt that we owned and the debt that was created back in the 70s and early 80s by the banks had very strong covenants. Those covenants carried over into bond contracts, which were issued up until around 2002, 2005. And those contracts had provisions in them that enabled creditors to actually go to court and enforce. And notably, the provision that some of us relied upon was the pari passu clause, which required that certain classes of Argentine bonds be treated equally in terms of right of repayment, not ranking, but right of repayment with every other class. But since 2002, there's been a concerted effort on the part of the official sector, by which I mean the EU, US government, US Treasury, IMF, World Bank, to change the terms of the bond contract. And almost every term that enhanced the ability of creditors to enforce has been diluted to the point where what happened in Argentina in terms of enforcement is virtually impossible today because the terms of the contract are so weak.
And why would the rich Western countries agree to that? Because surely they'd lose out if they're the ones investing in these emerging markets who would potentially default.
Well, it's a country club. So countries side with countries, and the my suggestion, and which I've written about, is that I think that we should really change the whole enforcement regime. We should repeal the State Immunities Act. We should repeal the Foreign Sovereign Immunities Act, which is the State Immunities Act is the UK statute. The Foreign Sovereign Immunities Act is the US statute, which enable countries to waive immunity, waive their absolute immunity, and be sued in local courts in New York or in London. The premise is great, but it implies some things that are problematic, like sovereigns borrowing in currencies that aren't their own, which is a complicated decision, because particularly in a country like Argentina, which has weak institutions, the idea that they're going to be able to ensure to creditors that they're going to be able to come by the dollars at a price that they're willing to pay at a later point in time is implausible. So I think that the better approach would be to essentially cancel the experiment that's been running in emerging market debt since 1976, and go back to absolute immunity. And if countries can borrow under local law in their own currency, great. If they can borrow under local law in someone else's currency, euros or dollars, great. But we shouldn't give them and pretend to investors that if you run into trouble, you can go to court in New York or in London, and the courts are going to bail you out, because that's just not the reality today. Okay, no, fair point. And this kind of brings us nicely onto the world today. You know, we have Russia, who have been sort of sanctioned in different ways, and we'll talk more about the sort of the here and now. But in your book, Undermoney, which I'm almost finished, which I have to recommend to all the listeners to read, which is kind of this action-packed novel about a hedge fund guy and some of the sort of characters, and a group of people that are trying to move a very large sum of money into the sort of the financial system. But the book, what I liked about the book was that it, while it's fiction, it seemed, I mean, correct me if I'm wrong, to reveal how money gets transferred around the world, even between sanctioned entities to non-sanctioned entities. So the side, like, I've been in finance for 25 years, and, I've worked with really big institutions, but even then you don't really know kind of what's kind of where the source of the money is. And you kind of open up, you remove the veil, and you see all the ways that money that's attached to sort of criminal activities, bad actors, bad state actors, how that just enters the system. And there's kind of an incentive system with everybody, from major banks in the West to the military in the West, to allow this to all happen. And so, first of all, sort of well done for writing the book. But then also in the book, when you talk about the ways people transfer money through sort of central banks of smaller countries to, the US military dumping cash somewhere and retrieving it somewhere else and putting it back into the system. I mean, how much based on fact is that? I mean, do these types of things happen? There's not that much fiction in Undermoney. I want to plug the word Undermoney for a second.
Sure.
And got right into your question and your thoughts, because they really are salient today. I define under money. I define as money that's not visible to the public, but which controls people and events. And it's kind of the money that we all know is out there, kind of bubbling beneath the surface, but we don't know quite who controls it and where it's come from and where it's going. But we know it's there. We feel its effects all the time.
And you didn't want to use the word like black money or something like that, some people use terms like that, or illegal money or something, or.
Yeah, so black is value laden. It's so a lot of under money is not ill-gotten gains. It can be, take the example of the American political system, where huge sums of money flow from basically billionaire donors to action committees and issue committees, really with which can accept unlimited amounts of money, quite anonymously. So you have legally gotten gains that are hurled like thunderbolts from Olympus, from the left and from the right, and they're devoted to supposedly issues, but they're all supporting candidates in the end. So that's the idea behind under money, is that it's hidden, not necessarily illegal. But here, your point and your question about the relevance to flows today, there are some things in the book that I adapted from. Like, for example, I'm morally certain that a few years ago, when the Saudis and the Russians were, engaging in their Punch and Judy show about whether, somebody's going to increase production or reduce production, whether prices should go up, should go down. And they went through that. You recall this. Went through this was the same period when oil, for a point in time went negative because the markets were so confused. I am morally certain that the Russians and the Saudis were trading on their own behavior. They knew it was going to happen. They knew the impact on the market, and they were taking advantage of that at every stage of the game. So I think that for me is classic under money. It's people controlling events and actually trading on them. Okay.
Yeah. Yeah, I mean, you allude to that a number of times in the book, or explicitly, where how come certain funds are so successful, and it turns out they're in the know about these state actors were able to cause events to happen, and so they can position around that all. And what you're saying here is that the state actors themselves are also trading, and so it's not just the political action. There's actually a financial gain that they have as well.
Yes, it's on both levels. It's political and it's economic, and there's a inherent logic to it, right? These institutions and these actors know how markets work. Why would we believe that they're not using them?
Yeah. And then another thing you had in the book was this thing about the Latvian central bank. I'm not sure if it's to do with Latvia specifically, or you're just saying, smaller central banks, but you were saying that, if you wanted to, let's say you had $1 billion of, cash that you wanted, that ill-gotten cash, in this case, you wanted to somehow get that into the financial system. I would have thought, before I read your book, that the way you do that is to, use that to buy property in London, or buy art and auctions and play that whole kind of game of trying to clean the money. But you posited that, and actually you can use a central bank to do that, where you transfer it in some way to a smaller, a compromised central bank, and they could actually, bring it into the system.
Yeah, I do pick on poor Latvia. I could have picked, and in the sequel to Under Money, I'll expand the net to cast blame on a lot more people. But as you say, anytime you have if you have illicit funds, you need to get them into the system somehow. So you need a bank or a central bank. You need some sort of a a mechanism to move them into the mainstream economy. And again, to your point, I mean, art and real estate are prime asset classes for ill-gotten gains. And I think that explains, I think we've now seen this in London and New York, other European cities to a lesser extent, the dramatic rise in asset prices over the years, because people are looking for safety. They don't really care about price. So if you pay $2,000 a foot or $3,000 a foot, it doesn't matter if you're moving your money from a drug cartels, or in the current day avocado cartels out of Mexico, into a central bank in, pick your country, Honduras, Costa Rica, Latvia, Lithuania, but moving it through institutions where the controls are not as sophisticated and rigorous as they are in many other countries.
You mentioned with Mexico, avocado cartels. I wasn't aware there were cartels in avocados. Can you elaborate a bit more on that? Yeah. I know avocado prices are very high, but.
Well, so this is, now we're, getting into kind of the theory and practice of sanctions. Maybe, do you eat, Bilal, do you eat Mexican avocados?
I eat avocados. I'm not sure the origin though.
Okay. You drink Mexican tequila?
I'm teetotal, so unfortunately.
Okay, so you don't do that. So let's see something Mexican that you would buy or eat. Anyway,
let's say avocados. Yeah, let's
say avocados.
Yeah.
So the drug cartels in Mexico have now control the avocado industry. They control the tequila industry. They essentially control every industry of any import in Mexico. Mexico is to my mind, is a failed state, and no democratically elected politician, living politician, lives without the imprimatur of the New Jalisco cartel or the Sinaloa cartel, or whoever is controlling different parts of the country at a point in time. But it's a classic problem for ill-gotten gains. You pile up more and more money, and what do you do with it? You invest it in things and in this case, it's terrorizing avocado farmers. But what it leads to is that as a buyer of avocados, you are putting money into the pocket of the cartel. And the cartels are sanctioned. And you and I, by buying those avocados, it's like somebody buying a yacht from Vladimir Putin. It's really no different, except in scale and the fact that the U.S. Treasury hasn't focused on it yet. But everybody who buys an avocado from Mexico is essentially sanction busting. Crazy idea, right?
Yeah.
But
I had no idea about this. Yeah. Okay. Wow. Okay, that's interesting. And then in terms of like monitoring of this, does the US or does the EU monitor these types of flows? I mean, is it that they're aware of it and they don't do anything about it, or is it that they're not aware of it? Or how do like international institutions respond to this?
Well, it's do they do anything about it? Yes, at the margin. Do they know about it? Yes. Can they track everything? No, it's impossible to track everything. And the industry of facilitators moving money around for either for kleptocrats in a particular country, or or drug dealers and cartels, or anyone else who wants to move their money around illicitly. The industry is huge. I mean, we've all followed the so-called London laundromat story. How the very tony solicitors and barristers and bankers and trust companies are all part of helping oligarchs, not just Russian oligarchs, but oligarchs writ large, move, hide, and protect their assets. And I think that since post-February, very aggressive round of sanctions, I think that industry is now working overtime. I think probably those folks have not gotten much sleep, and so it's such a big part of the world economy that it's actually impossible to shut it down, in my view.
Yeah. And actually, you make a good example about the London laundromats issue, the UK in general, where there's a recognition by most people that this huge amount of this type of money is going through the economy here, yet nothing is really done about it in a true sense. So that implies that people in positions of power are complicit in some way, maybe because it's funding certain activities of theirs. Maybe they get to fly in private jets with these people. I mean, what do you think? what do you think is, is it that simple that it's just the money so large that you end up becoming complicit in it, and or is there something else that kind of allows this to still happen in a country like the UK?
It's as you say, the money is just so large. And we could take the case of the Russian oligarchs just as kind of its current example. So the Russian oligarchs were great guys until 90 days ago, but great guys. They were, I don't know the details of all the investments they made in the UK, but I know in the US, at every major university, there are buildings named after them, and they were wined and dined. Their children went to, Harvard, Yale, Princeton. They funded institutes. Now, all of a sudden we don't like them anymore. Well, they haven't changed, and our knowledge about how they made their money hasn't changed. But somehow the attitudes have shifted a bit. My question is how long it's going to take for them to shift back so they're good guys again.
Okay, that's interesting. And I mean, now that we're talking about Russia, I mean, what is your view on the sanctions that have been imposed on Russia? So there's sanctions on the oligarchs, the central bank assets were frozen, there's restrictions in trade outside the energy sector. I mean, what's your general view on the sanctions that are imposed on Russia?
Yeah, sanctions don't work. Sanctions are, think about the countries that we've sanctioned aggressively for decades. North Korea, that regime is still there. Iran, that regime is still there. Cuba, still there. Venezuela, still there. Nicaragua, still there. So you have all these people that are defined as bad actors by actually a really relatively small number of countries. It's, if you look at the countries that have signed on to even the Russian sanctions, it's not, it's maybe a third of the members of the UN. It's not a majority, not a plurality. So I think that sanctions are they're a stunt. They're extremely inconvenient. But what they, as a transmission mechanism, what they transmit, and I think we're seeing this, and this is part of what's problematic about them, is that, Russian grain, Ukrainian grain, oil, gas, palladium, neon, gold, they're all going to find their way out. They're going to cost more. So, and part of this is a feedback loop into inflation. So in a way, the sanctions have been extremely costly, not in any way, but extremely costly to the West at a time when we're facing inflationary pressures anyway. We made matters worse with the sanctions, and I don't think that the assets and the money is still flowing, but it's flowing via other mechanisms. So whatever mechanism the Iranians have used, the Chinese are very active in sanction busting. India. Are we prepared to sanction India and China the same way we sanction Russia? It's as big as the front door.
Yeah. And that's a very sort of fair point. So, and actually, we recently published a literature review in that, some academic papers on sanctions, and what we found was that you're right, it doesn't help. the situation. If anything, what it tends to do, it hurts the general population, and it solidifies the authority in power, and so it just doesn't work. In some ways, it can often be worse than a kind of a military intervention.
Well, and this is that I'm glad you raised that, because that's a very important point. And Putin said this early on, and I think he's right. The West declared war on Russia by imposing these sanctions, and all you have to do is look at how the Chinese approach, their declared war against the West, which is win without fighting. I mean, that's been their policy. They broadcast it for decades. It's no secret. It's only a secret to people who have, bought into, Western liberal ideals, and hope that you get autocratic countries like China adopting our values. Well, they haven't adopted our values. In fact, they've used our markets and our rule-based international order to their own advantage.
Yeah. Now, I mean, coming back to some of the Western institutions, I mean, what I did find interesting in your book was how you show how, say, the US military operates as well, because we get the impression that the US military is this pristine organization. Obviously, that's propaganda they present to us in many different ways. But you give some examples of the large cash drops that was seen during the various Middle East wars, where was it like almost like hundreds of millions, if not billions of dollars were dropped into the desert with the intention of, I assume, bribing different groups to do things. But often that money could potentially have gone back to certain parts of the US military and brought back into the US for use in other ways. I mean, is that, I mean, that was in your book, but I mean, do you think that actually did happen?
I think yes, it certainly did happen. The money drops were, and for all we know, are a major feature of U.S. foreign policy. It's not a spoiler because it happens in the first chapter, so yeah, we can talk about it. But in the first chapter of Undermoney, the U.S. government drops 24 pallets that contain $2.4 billion out of the back of a C-130, and is picked up by a group of American patriots that essentially steal it in order to get one of their members elected to higher office and essentially change the world with stolen U.S. money. But the point is, and their rationale for doing that, their self-justification, is that money was going to get stolen and wasted anyway. It was just what the Arabs call green rain. It just comes down from the sky. Afghanistan is a great example. There was an expose in the Washington Post 6-8 months ago about how the U.S. military knew for years and years that the activities we were engaged in Afghanistan were completely implausible and impossible, and we couldn't change anything on the ground. And yet they persisted in essentially lying to Congress about prospects for success in Afghanistan. And what we're left with today, we're living with it, is that had the U.S. not done anything in Afghanistan, not spent trillions of dollars and not spent thousands of lives, both American and Afghani lives, we'd be in the same place. So I think the problem with it's not a problem with the military. The military, I think, there are people who are patriotic, but they want to use their toys, right? It's just no fun to have all these toys, and you actually can't justify the toys unless you've got problems to solve. So there's an inherent conflict in the military's view and its assessment of situations and what people might otherwise decide had they not been influenced in that way.
Yeah. I thought it was a great sort of revelation in the book too, the way you described it all. It feels kind of very visceral, and you really get become aware of that sort of dynamic. Another thing I noticed in your book was you mentioned this Dutch legal structure called, is it stichtings or something like that?
Yeah.
which is this kind of strange amorphous legal entity that allows a large amount of capital to be held, but it's hard to assign, like work out who's in control of it. It sort of gets passed down generations. I'd never heard of that structure before, but can you talk a bit more about that structure?
Yeah, so stichtings are, are kind of disconnected vehicles that are not owned by anybody.
Okay.
Are controlled by people, but they're structured in a way that makes their, the actual determining actually who controls them almost impossible to determine. And they've existed under European law for centuries. The Dutch really pioneered them. They're, I guess, you could say, an early form of corporation, limited liability company. They're not necessarily limited liability. They don't need to be. They're, if I'm going to analogize it to a kind of conventional vehicle that we all see and use all the time, it's the trust. But it's a trust that exists in a way that is self-perpetuating and beyond time and beyond the control. With control, it's impossible to penetrate. So you've got self-perpetuating trustees that are able to, act on behalf of ultimate beneficiaries, but no one knows quite who they are, and they're not regulated by anybody. And these vehicles exist to this day.
And so these vehicles could contain billions of dollars of capital of some form, and they could be investing in different markets, but nobody really is quite sure who's the beneficial owner or who's controlling it. And it's all a legal structure. It's all allowed.
Completely legal, and in different jurisdictions. And, as we were talking before, the industry, if you think about how much money is involved, and it's historical legacy wealth of families. It's the wealth of criminal organizations. It's the wealth of, in the case of a country like Russia, it's the wealth of a country like Russia that's been siphoned off by the Siloviki, by Putin's cronies. But we can't really just blame the Russians. It happens in many, many countries. It happens in most African countries where you have this tribalism that results in assets being diverted from the state to private interests. So you have the industry surrounding, protecting, hiding, and managing these assets is massive. It's kind of a natural phenomenon, and it's hard to even imagine how big it is.
I mean, is there any way of finding information on these entities or not? It sounds like it's almost impossible to, yet it's there.
If our London solicitors and the managers of the London laundromat are doing their job properly, we'll never find it. We'll find things at the margin. We'll find, the odd $400 million yacht or a few planes, but we're not going to find the big stuff.
Okay, that's quite interesting. Yeah, and so if you were a policymaker then, so you were in government in some form, I mean, what would the types of people are always talking about how they want to reform the financial system and clamp down on offshore centers and things like that. What would you propose?
Look, I think you want as a for me it'd be realpolitik. I think that you want fewer enemies and more friends. And let's just think about the sanction regime as an example. In the US, 10,000 entities and individuals are subject to sanctions. 10,000. That's crazy, right? So we've created 10,000 enemies in dozens of countries. Why are they our enemies? So I'm not, it's very difficult to export morality. And I think that certainly the American view, and to some extent the Western European view, that you can export morality is a flawed idea. And it's upsetting. I mean, it's upsetting to think that you might be forced to deal with entities, institutions, and countries that are engaging in reprehensible behavior. But I just like to use China as the classic example. I mean, China is not only is it corrupt, it engages in genocide. I mean, the stories coming out about concentration camps and about organ harvesting are horrific. And this has been going on for a very long period of time. But do we decide we're going to sanction China the way we sanctioned Russia or the way we sanctioned Iran? No, because it's inconvenient. And, the same is true in a country like India, where Modi is on a campaign, to suppress Muslims. I mean, it's a horrific situation that he's abetted. And yet we choose not to recognize moral failings of the Modi administration, and certainly not of Xi Jinping. So I think the whole way the West thinks about the world has been problematic and makes things much more dangerous for us.
Yeah. I mean, it's definitely eye-opening, everything you've said, and it all kind of makes sense. I mean, now to kind of move it to the more mundane, so to speak, you obviously had this finance background and legal, background as well. I mean, how, what made you want to write a book? Go into fiction, become a writer. What was motivation for that?
Well, I've always enjoyed writing, and over the years I've written op-eds relating to things that I was doing professionally. I'm still doing that. But when I retired, many of my friends said, you should really write about your activity because you had this, fascinating career involving enforcement of sovereign claims and cases involving many countries, and visiting many countries, witnessing, corruption at close hand, successfully trying to avoid it. But when I started to actually write, I realized it would be a snooze. So maybe my family would read it. Maybe you would read it. I say maybe, but because it's just, it's just not that much fun. So I thought, if I want to deal with some of these bigger ideas, the way to do it might be to combine them with an entertainment, and that's where I hit on fiction. And the two kernels for the book that really got me started were, one, the term undermoney, which, by the way, I've written to the Oxford English Dictionary because I want them to accept undermoney as a new word and give me credit for it. But it really is Japanese slang. It's a Japanese restaurateur who's a friend of one of my sons visited us in New York, and I asked him whether it's different opening a restaurant in New York or in Tokyo, and he said no. He rubbed his fingers together and shoved them under the table and said undermoney. And that's where undermoney comes from. But the other is, I have a great friend who's a model for the one heroic character in the book. And he was in the military. He came back to Wall Street to make some money. Then he went back into the military, and he just retired from Cyber Command at West Point. But over the years, we would talk about what we would do to fix things, like how would we fix the world if we had the opportunity? And he would always tell me stories about things he was doing in his special forces activities and, his various, stuff he couldn't tell me about. So I started with this idea of, like, what would I do if I could explain things and as you said, open the veil to how things really work in the world of money, and introduced, some conversation about some of these ideas. So that's really how I got started. But it was really my friend Don Carmel, who became the model for Don Carter, that got me started writing.
Okay, great. And always have this sort of battery of questions I ask, my guests as well. But I'll start with actually books. Given that we're talking about books, I mean, what are some of the books that have influenced you of your career or in life in general?
Well, the Tom Wolfe, for sure. And not just Bonfire of Vanities, but he wrote a wonderful book. We didn't have time to talk about this, but the art market. He wrote a book called The Painted Word. It's a little book. It's quite fabulous, about how intellectuals took over and corrupted the art market. I'm going to deal with this in the sequel to Undermoney. So that was one. Norman Mailer, Harlot's Ghost, wonderful, wonderful book about the Cuban Missile Crisis, according to Norman Mailer. Was a big influence on me. Contemporary fiction, Marisha Pessl, who is a marvelous writer, and Donna Tartt, thinking now of novelist Amor Towles. These are people that really influenced me in terms of my thinking about writing and structure, and who I admire deeply.
Okay, great. And then in terms of your time management and productivity, I mean, do you have a system?
I am such a slob. I am terrible at time management. I wish I could be better. I know some people have real systems where they get up in the morning, they get a coffee, and they work for 3 hours, or same at night. I don't have that. I kind of sit down whenever I can. What was interesting to me is that as you're writing something, especially in a long form, I find I'm always thinking about the ideas and the themes. And it's the most daunting part is keeping track of everything. And I'm now better than I was in Undermoney. I really had it was quite organic. I didn't really have an outline for the book. I now have an outline for the sequel, which is, it sounds stupid, but it's amazingly helpful.
That's good. It's good to know it's helpful. And a few more questions. One is, obviously you've got lots of experience in finance and so on. Have you ever received, what's the best investment advice you've ever received from anyone?
Yeah. So when I was at Lehman, this Alan Kaplan was the head of risk management, and he was a great old man in the firm. He wasn't that old at that time; he was probably in his 50s. And I had just started this brand new trading desk, and to give you a sense of how lax things were, or how different things were on Wall Street, we had a few guys sitting on a desk, and we would, pick up phones. We'd call one bank, we'd call another bank, we'd put a deal together. We would then write the documentation. We would send it out. We would write the wire transfer instructions ourselves. And so it's come from a risk, from a risk management and from controls perspective, it's completely, absurd. But this was maybe a function of Lehman, or a function of a new business, or less, a different world, because this was the 80s. We were kind of less mindful of all these things, know your client and controls and everything. But one day we actually had a very successful transaction. We made $500,000, and it popped up on Alan Kaplan's list. And he called me and he said, so sitting on the trading desk, young kid, called up to senior partner of the firm. He sits me down, he says, Sonny, how'd you make the $500,000? So I told him the whole story. I said, we called this bank, we called that bank, we put them together, we sent out documentation, we wired the money, and $500,000 fell out into, Lehman's pocket. And then I said, and there was no risk. And he said, Sonny, there's always risk. And if you don't think there is risk, you're just not thinking straight. And I was completely furious with him. I thought, what kind of a jerk is this? Here I am, starting a business, making the firm money, just trying to do a good job. And of course, he was absolutely right. And I've never forgotten that story. And I think about it, pretty much every day.
Yeah, no, that's great. That's great advice, actually. It makes, it's something we all should remember. And then the last question I wanted to ask, we have many young people who listen to our podcast. And so what advice would you give to kind of youngsters who are just starting their careers or leaving university?
I would say don't treat anything as a trading sardine. Really dig into if you're going, no matter what you're doing, but it doesn't have to be finance, but I use finance because it's the world that I knew and that I know and I grew up in. It was shameful on my part that for 6 or 7 years I was trading these instruments and I had never bothered to read them. I didn't know what the contract said. So my advice would be that whatever you're doing, really dig into the details and the history and become an expert on the gory detail of how things work. Whether it's trading systems or whether, God help you, it's cryptocurrency. Cryptocurrency is a perfect case in point. Who can audit the software? Right? Who really knows what's going on under the hood of crypto? And I think until and that's just the most recent example. Crypto, I'm not negative on crypto at all, but I think that people trade it without understanding what it is and what it means and what it implies, and a lot of people are going to and are losing money because they haven't understood that and haven't taken the time to figure it out. So I would say figure it out, become an expert in whatever it is you're working in.
No, that's great advice. What's the best way for people to get hold of your book, Undermoney, which I thoroughly recommend everyone to read. It's an easy read. It's a page turner. So I keep wanting to kind of go back every moment I have to finish the book off. So where can they find the book?
Thank you. It's on Amazon. It's on Barnes and Noble. I'm on Twitter from time to time, but I would thank you for those for your kind words about the book, and I hope more people will read it.
That's great. So with that, thanks a lot, and and good luck with the next book as well.
Thank you very much. Such a pleasure.